Forget trying to manifest money on TikTok. Real wealth isn't vibes, it's assets. Today we're ranking 13 assets from weakest to strongest, plus 2 that are straight-up financial red flags. You're watching M-Cubed Money Mindset Makeover. This isn't just a channel, it's a mindset revolution. If you're sick of drowning in debt, tired of advice from out-of-touch boomers, and ready to flip the script on your money, hit subscribe. Elevate your mindset. Elevate your life. Let's jump into the 13 assets that can make you rich, plus 2 bonuses you should run from. We're going from least to most powerful, and I'll back each one with stats and real talk. Number 13, physical collectibles, with caution. The global collectibles market is projected to hit $1 trillion by 2032. Sneakers alone are a $10 billion resale market. Got sneakers collecting dust? List 1 pair on StockX or GOAT and track what it actually sells for. That'll show you fast if you're holding assets or just clutter. But here's the risk. Only a tiny fraction of items appreciate. Most people hoard junk. Unless you've got deep knowledge, treat collectibles like dessert. Fun, but not the main course. Cool flex? Maybe. Retirement plan? Not so much. Let's step it up. 12. Peer-to-peer lending. Platforms like Lending Club once promised returns of 5 to 8% annually. But here's the flip. Default rates can eat into gains fast. The market shrank after regulators cracked down, but P2P lending still exists. Think of it like being the bank, just with higher risk. Download a P2P app like Prosper and invest just $25 in 1 loan to see how it works. Treat it like tuition for learning, never your rent money. Want steady gains without playing loan shark? Let's check number 11. 11. Commodities, futures contracts. Gold historically rises during inflation. Between 2000 and 2020, it jumped over 500%. But commodities are volatile. Oil swung from negative prices in 2020 to record highs in 2022. Unless you're seasoned, stick to commodity ETFs to hedge inflation instead of gambling on futures. Here's a Do Now M-Cubed hack just for you, since we're friends and all. Buy a $50 gold or silver ETF like GLD or SLV in a free investing app, and watch how it reacts when inflation headlines hit. Experience beats theory. Number 10. Real estate investment trusts, REIT. REITs average 10% annual returns over decades, similar to stocks, and they pay dividends. That's mailbox money without fixing toilets. In 2022, U.S. REITs held assets worth over $4.5 trillion. Open your brokerage app, type in O, Realty Income. Buy a single share and watch the monthly dividend land in your account. It's like rent money without tenants. They're liquid, diversified, and perfect for those who want property exposure without landlord headaches. 9. Rental properties. Average U.S. home prices have grown 5% per year for decades. Combine that with monthly rent checks and you've got one of the oldest wealth engines in history. But remember, 72% of landlords report unexpected expenses every year. Cash flow is real, but so are leaky roofs. Even if you can't buy now, go on Zillow and calculate the rent versus mortgage in your city. See the math behind why landlords win long-term. 8. High-yield savings accounts. As of 2025, some HYSA rates sit above 4.5% APY. That beats leaving cash in traditional banks at 0.01%. This is your safety net, your cash cushion. Move $100 from your main bank into a high-yield savings account and watch it earn real interest instead of pennies. Small shift, big mindset upgrade. Won't make you rich, but it saves you from panic when life hits. Number 7, bonds. The 10-year U.S. Treasury has averaged around 4.2% returns since 1928. These are consistent, persistent trendsetters. Bonds smooth out your portfolio during crashes. Remember 2008? Stocks tanked 37%, but treasuries gained. Buy a $25 digital U.S. savings bond on Treasury Direct. It's a no-frills way to feel the difference between gambling and guaranteed growth. Not sexy, but stability is underrated. 6. Employer stock plans, 401k company match. If your employer matches 401k contributions, you're leaving free money if you don't contribute. A 100% match on 5% of your salary is literally doubling your investment instantly. Tomorrow, log into your HR portal. If you're not at least contributing up to the match, fix that today. That's instant ROI. It's the closest thing to cheat codes in personal finance. 5. Index funds. The S&P 500 has averaged 10% annual returns over nearly a century. Warren Buffett himself said most investors should stick to index funds. They're boring, yes, but boring builds empires. Put $50 in an S&P 500 index fund, ticker VOO or SPY, and track it for 3 months. Compare it to your savings account. You'll never look at money the same, a true game changer. Number 4, exchange-traded funds, ETFs. Think index funds with flexibility. Global ETF assets crossed $10 trillion in 2023. You can target clean energy, AI, international stocks, you name it. Pick one ETF aligned with your passion and invest $25. Let your interests build your wealth. ETFs let you diversify and move quickly. Number 3, high-quality stocks. Amazon IPO investors in 1997 turned $1,000 into over $2 million today. That's the power of picking winners and holding. The challenge? Not confusing memes with long-term growth. Buy one share of a company you actually use daily, Apple, Netflix, Nike. Every time you use it, remember you're not just a consumer, you're an owner. Diversify, hold quality, ignore noise. Long game here, but an asset that will make you money. 2, your education and skills. According to the U.S. Bureau of Labor Statistics, college grads earn 65% more than those without degrees. But here's the kicker. Tech boot camps and trade skills often out-earn traditional paths. Upskilling in coding, AI, or even trades like plumbing can turn into 6 figures fast. Sign up for one free online course this week. Coding basics, design, AI tools. One skill can shift your earning power more than any stock. Your skills are inflation-proof assets. And don't just take it from me. Ben Franklin had it figured out centuries ago. If a man empties his purse into his head, no one can take it away from him. An investment in knowledge always pays the best interest. That's a big one, fam. Build you because nobody can repossess what's in your head. But number 1 on the list is 1. Emergency fund. 60% of Americans can't cover a $1,000 emergency. That's why an emergency fund is the #1 asset. It prevents debt spirals. Aim for 3-6 months of expenses. It won't make you rich, but it keeps you in the wealth-building game. An actionable step now, you say. Okay, deal. Start with $20 today in a separate savings account labeled Emergency Fund. Seeing that label every time you open your app builds new money habits. And I harp on this in a lot of videos because it's that important. Like JFK said, the time to repair the roof is when the sun is shining. In other words, fix your roof before it rains. This fund is your umbrella, your shield, your safety net that keeps you in the wealth-building game. Drop it in the comments. What's your biggest money leak right now each paycheck? Rent, food delivery, car payment, Amazon late-night orders? Let's call it out. Here's the shift. Wealth isn't about saving pennies, it's about owning assets. Every dollar can either die as a latte or work as an employee. Assets are money employees that never sleep. Stack enough, and suddenly your money pays you. Think about compound interest. Invest $500 a month at 10% returns, and in 30 years, you've got nearly $1.1 million. That's the quiet superpower the rich use daily. This is where broke ends and ownership begins. Now a little bonus because I'm in a giving mood today, friends. Here are 2 assets to avoid at all costs. 1. Depreciating liabilities. Think about the last time you saw a brand new luxury car drive off the lot. Statistically, it loses about 20% of its value within the first year, and by year 3, that number can skyrocket to nearly 50%. Designer clothes? Most resell for less than 10% of the original price. Every time you spend money on something that immediately loses value, you're not investing, you're creating a money pit. Ask yourself, is that purchase building your future or quietly draining it? True financial growth comes from assets that appreciate over time, not items that vanish in value the second you pay for them. 2. Get-rich-quick schemes. From flashy crypto pump groups to multi-level marketing programs and unverified stock tips, nearly 80% of day traders lose money within their first year. These schemes promise instant wealth but rarely deliver. Research from the North American Securities Administrators Association shows that small investors chasing these opportunities are overwhelmingly more likely to lose than gain. The rule is simple. If it sounds too good to be true, it probably is. Sustainable wealth isn't about luck or speed. It's about time, consistency, and owning real, appreciating assets that compound your money over years, not days. So here's the blueprint. Stop stressing over small cuts and start stacking real assets. Build your emergency fund, invest in skills, stack index funds, grab opportunities in real estate and stocks. That's how you flip the script. The system profits when you stay stuck. but you don't have to play by its rules. Break free by saving smarter, investing consistently, earning more, and budgeting in a way that keeps you in the game. M-Cubed fam, you got this. Keep chipping away at the rocks, revealing your own David moment, and start building better habits with small, actionable steps that compound into real financial success. I believe in you. Drop a comment below and let's talk about your financial plan. Let's make sure you're setting yourself up to win. Up next, we're breaking free from the grind with M3's version of how to make money online, the Gen Z and Millennial edition. Trust me, you don't want to miss this one. See you there, M-Cubed family.